The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
All right. Happy Tuesday out there to everybody. Great day to be watching the small caps. Now, this is interesting because one of the things that I see a lot, you hear a lot about sort of in the mainstream financial media, and people love to tell me, you know, when they hear I do this small cap show that I'm focusing on, people love to say, well, small caps are lagging. And that's the first thing people say, small caps are lagging. Well, yeah, they are. The S&P 600 is lagging the benchmark index year to date. I was looking at it. The numbers as of yesterday, the S&P 600 was up about 8.26% year-to-date behind the S&P 500, which was up about 11.5%. And on a quarter-to-date basis, which of course means the month of July, small caps were also lagging. But be careful, because you don't want to use all the time a sweeping analysis like that. It does not necessarily give you the full picture, and you might be overlooking some pretty good possibilities. Don't forget, a lot of the S&P 600 names, they're value names. They can be fairly widely held stocks that just haven't necessarily gone anywhere in quite some time. I mean, you find that a lot when you kind of get under the hood and start looking at some of these index components. But meanwhile, as many of you know, if you've been listening to this show, if you've been subscribing to our Low Price Leaders newsletter, which features the small caps, and if you have not subscribed to that, check out the homepage of TFNN.com. You want to take the opportunity now to get a trial and to get in there at this introductory rate that is going to go away in a few weeks. So now's a good chance to get in there on that. But if you have been following these, you know that from the ranks of the small cap growth names, there really is quite a bit of opportunity that you won't necessarily find in some of the more traditional value stocks. Now, one that I wanted to just kind of start out by discussing today, if you were following some of the earnings news after the close yesterday or early this morning, you might have heard about Cirrus Logic reported. And I've got a chart of the IWM up there on Tiger TV. We can come back to that. I usually just kind of tend to open with that, but I want to talk about Cirrus Logic. The ticker is CRUS. And if you're watching Tiger TV, if you're looking for the price way down here, you're not going to see it because it's way up there. Gapped up nearly 23% this morning. The company reported earnings its first quarter after the close on Monday. Now, here's what's interesting. It missed views, but as you know, that frequently is not really the driver of whether or not a stock is going to make a big move. So it was a little bit disappointing on the EPS, but obviously nobody cares because it issued some huge second quarter guidance, and the markets are interpreting this as a signal that there's big news ahead from Apple. And of course, Cirrus Logic, just to back up a little bit, this company supplies audio technologies to Apple, but they can't mention Apple. None of the Apple suppliers, I think that's pretty widely known at this point, the Apple suppliers cannot mention that they are indeed Apple suppliers. The reason that this becomes known is there are a lot of firms out there that actually reverse engineer, in other words, take apart the Apple gear and trace back where the source components are from. So these companies have been able to identify many of the suppliers, and Cirrus Logic is one of them, So Cirrus Logic is forecasting a huge second quarter, and markets are interpreting that as a signal that there's big news from Apple, maybe this iPhone 5 that's due out in the fall, or maybe a new product introduction. There's been a lot of chatter about some kind of smaller tablet coming out from Apple. Who knows? Apple doesn't pre-announce that kind of thing. But nonetheless, you see that Cirrus Logic is getting a nice boost from that. Just for fun, I did see that Apple was up this morning when I looked a little bit earlier, and we've got a nice boost right here in Apple today as well, back above that $600 level. So seeing some good things there from that Cirrus Logic report. Now let me just let's just take another look here at Cirrus. This is one that I've been tracking for quite some time, and we have been following this in the newsletter. I don't like to get into stocks ahead of earnings. That's just one of my risk management techniques. Now, this is what happens sometimes, and you've just got to be honest about this. What happens a lot of times is you will miss some kind of move up like this. You know, it's about a 50-50 shot, though. You could just as easily miss out on some kind of huge gap down and lose your shirt on a trade like this if you try to get in on it ahead of earnings. So the question is, what do you do now? What you'd be looking at this juncture would be a couple different things could occur. First of all, you want to see some kind of pullback to one of these shorter-term moving averages, perhaps the 5-day line, or you might want to see some kind of tight trading range. Obviously, you never want to chase a 22% gap higher. Might it run higher? Sure. You know, the thing is, everybody has the buyer's remorse, or the non-buyer's remorse, I guess it would be, if you miss out on something like this. But, you know, again, how many times do we see a stock get punished when there's something disappointing in that earnings report? I mean, really, this could have just as easily been some kind of weaker guidance that also could have potentially sent Apple lower. So it's really, it's just sort of a roll of the dice here when it comes to that ahead of the earnings. Now, it is not a roll of the dice as to how you use these probabilities to handle it at this juncture. So you're looking for some kind of moving average pullback. Obviously, that 5-day moving average, all of these moving averages are going to rise higher. You want to see how the stock performs relative to those in the next few days, weeks. This one could very easily offer some kind of new buy opportunity in the not-so-distant future. So I definitely want to continue tracking this. I want to make a couple changes there on my screen. Sorry about that. Just had some other items up there on Tiger TV, if you're watching, that were distracting me a little bit. Had to get rid of that. So we're back to the Cirrus Logic view. I'm going to move this over to another stock. We are smack dab in the middle of earnings season, and we're seeing a lot of these stocks are making some big earnings-related moves. This is one I've talked about quite a bit as well. This is Texas Capital Bank, and this is a pretty good example. It didn't gap up as much as Cirrus Logic. You wouldn't expect it to. It's not from the infotech sector. It's just a little old Texas regional bank, so it's not going to have that kind of explosive move. Unless there's some kind of acquisition or something, but just on some kind of earnings report, you're not going to see the kind of explosive move in a stock like this that you would in something that's, say, an Apple supplier. However, you do see here on the chart, nice move up last week. That would have been on Friday. Moved up almost 7% in heavy volume. You can see that big volume as the stock moved up after its earnings report. Now, this is kind of what I'm talking about right here. We're seeing a little bit of a very gradual pullback in the last couple of days. Very nice action. You might see perhaps a little bit of a handle formation here that might offer you a new buy opportunity below that prior high. We are seeing the shorter-term moving averages moving higher, as naturally you would expect to see after that kind of move. Really liking this. This is pretty much, actually, thus far, a textbook illustration of the kind of chart you want to see. You want to see that move up after earnings and then a gradual pullback that could offer you a new chance to get into the stock. This has been a very strong performer in the last few months. It's got nice support above that 10-week moving average. You know, the only thing I would kind of say here is that you just want to be sure it's not starting to get a little bit long in the tooth in terms of how long it's rallied. Now, back here in the notorious summer of 2011, when everything kind of broke down, if you remember, it was just about almost a year ago. We're really just right upon the anniversary of that right now, when we had that early August meltdown here, and it actually began a little bit before that. It actually began showing some signs of weakness in the later part of July. And yes, I'm seeing, I see somebody in my friend there in Tiger's Den said late July. I don't know if he was talking to me or not, but yeah, that did coincide with what I was saying there. So late July, early August. I do remember the big meltdown occurred right around August 4th or 5th of last year, because I remember exactly where I was. I was in Canandaigua, New York, and a little aside here, it's very humorous to me because of Ryan Lochte in the Olympics, hearing all the NBC announcers pronouncing Canandaigua, New York correctly. I'm sure they all have it spelled out phonetically in front of them, but anyway, that's where I was. I recall that happening. I was already out of the market at that point and was not sweating that huge decline because I had gone to cash in my discretionary holdings already prior to that. So you do see here, coming back to the TCBI chart, you see how this stock made a correction right here, undercut that prior correction, okay? It had formed a little consolidation right in here, rallied to a new high, then you had the market meltdown, undercut those prior lows. So what I like to see there, why that's a good indicator, is because that serves to flush out a lot of the sellers. It kind of sets the stage for some bargain shoppers. And indeed, and again, this is a good sort of textbook example of what you want to see. What that did was set the stage for other investors and traders to come in, buy this stock at the lows, and send it higher. So you notice it did trend higher, rallied to a new high, actually just in, that would have been Friday, as a matter of fact, right after that earnings report. So actually would have been yesterday. It rallied to an intraday high yesterday because the markets opened higher, then pulled back. So TCBI was moving along with that. So this is a nice example of another one of these small caps that we're tracking. And I believe this could offer a buy point soon. Okay, I'm Kate Stalter. This is the Small Cap Roundup. Stick around. I'll have much more for you after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, we are back. Let me give out the phone number here, 877-927-6648. We've got a few minutes in this segment, and then in the next segment of the show, we will be bringing on Dave Fry from ETF Digest, and should have an interesting conversation with him. Dave has been on the show before, has some terrific insights into the economy, the markets, and, of course, ETFs. So we'll be looking forward to speaking with Dave. Now, let's see. Let me put up a chart over here of a company that I think a lot of you will know about from the TV commercials. Ancestry.com. ACOM is the ticker. Now, this is another small cap. This is one of these, a lot of these stocks we talk about on here, nobody's ever heard of, and that's fine. But a lot of them are stocks that maybe have some kind of bigger presence in the consumer space, and this is certainly one of them. Being an internet content kind of company, it tends to get a little bit more attention. They also, as I just said, they do a lot of those commercials. They had sponsored a TV show, but I believe it got canceled. It was Lisa Kudrow, and she was hosting various celebrities who would track down their ancestry, and Ancestry.com sponsored that. I guess it got canceled, maybe just not enough mainstream interest, because maybe not enough people really care what a celebrity's genealogy is. I don't know. The company is still big on issuing press releases. They like to make a splash. I noticed this morning they had a press release they put out. They had tracked down some of President Obama's ancestry. So they like to do things like that. They like to get out there and make their product known in the sort of celebrity arena. Now, let's see here. This one is kind of interesting. This one reported earnings last week, and it rallied. You see here another good example of where it rallied and is now pulling back a little bit, kind of similar to what we just saw with Texas Capital Bank, where there's a little bit of a pullback here that could offer a buy opportunity. Now, you notice there is some overhead resistance up here. It reached its high back in April 2011, so that was less than 18 months ago. And I know, we typically, most of us tend to look at the 52-week high. But really, there's been some research that has shown that when you have some overhead resistance at 18 months, it could still be relevant. Well, obviously, this has a whole lot of work to do. So, could that be a little bit of a concern? Potentially. One thing, though, this is a fairly new IPO. It made its NASDAQ debut back in, I think it was 2009. Yes, November 2009. So, obviously, that would have been well after the markets had begun to recover from that big downturn. So this one, it is definitely a relatively new IPO. It's sort of in those youthful stages where it could still have quite a few growth spurts, and we're seeing some good double-digit earnings estimates. Now, this is a volatile stock. It's got a crazy beta, 1.25, so you got to be careful about that. You might want to, if you're trading this one, give it a little bit of latitude just in terms of where you're looking at the stops. I was kind of looking at that a little bit this morning of where it's tended to get some support, given the fact that it does show some volatility. Historically, the 15-day exponential moving average has been a pretty good indicator, so if you get support there, that has tended to set the stock up for some further gains. But if it slices through that line, that has not often led to good things. So that could be something to look at there. I want to just mention a bit on the stops. I've kind of noticed in the last few days, we've gotten a couple calls, and people, when we're talking about some stocks and just asking where, I've asked some people where they've set their stops. Be careful. You got to set your stops. Have a plan when you buy a stock, and know where you're going to exit the stock if it does fall beneath that point. You can use a number of different things. Some people use percentages. I find that across the board that does not really always work with these smaller names. Sometimes some of the moving averages you might want to look at historically, where it's tended to trade relative to some of those shorter term moving averages, could be a very good indicator. Sometimes if it falls as far as the 50-day, 50, that's a little too late. Okay, stick around. Dave Fry from ETF Digest will be joining us right here on the Small Cap Roundup.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we are back with the European close portion of today's Small Cap Roundup. We just had the Euro moving higher, got some mixed results on the European indexes, but we do have the Euro moving higher. And we did have some of the U.S. indexes higher. I'm looking at the S&P is about flat right now, so it's just kind of one of those days right now. It'll be interesting to see how this plays out. Now, speaking of Europe, I'm about to introduce our guest. He's a repeat guest, Dave Fry from ETF Digest. And if you don't follow Dave on Twitter, I suggest you do, because he has a whole lot of terrific observations, and you might say snarky, and I mean that as the highest compliment, because I really enjoy Dave's observations about what's going on with the economic reports, with the markets. So, Dave, welcome to the show. You caught my attention the other day because I think we had that big announcement that drove the markets higher when Mario Draghi said that he would do whatever was necessary to keep the Eurozone together. I'm paraphrasing a bit right now. It was really nothing different than he had said before, but people seem to take it with a whole lot of enthusiasm. And then we had some words this morning from the French president. So kind of give us your take on what you're seeing with all these market movements based upon every utterance from the Eurozone these days.
Hi, Kate. How are you?
Oh, doing great. Happy to have you on the show today.
Well, as far as the Eurozone is concerned, of course, is you had that pronouncement as you mentioned from Draghi, but still the missing ingredient is going to be Germany and the Bundesbank and Merkel and her party. And this morning they've already stated that they're not going to go along with giving the ESM, which is the European Stability Mechanism, and not to get too lost in the weeds here, but is the what they're wanting to make it a bank is Draghi and some others like France's President Hollande wants the ESM to be a bank and get a banking license, which the Germans have said no. And yesterday the Germans said no again with Finance Minister Schäuble coming in and saying absolutely not. So the question becomes, are the Germans going to blink and go along with what Draghi and Hollande and Monti and Empoy from Spain are saying? And the expectations are, which is rather surprising for me, to see the euro currency higher today, especially after all that negative news out of from the Germans. So people obviously think that they're going to go do something and bonds, but the Germans have absolutely said no. So that's kind of where it stands at the moment.
And you know what is just so I think vexing, or I don't even know the word for it. It just seems that Draghi can say something, then a German official can say something, and they just kind of go back and forth, and the markets can show these tremendous moves in either direction just based upon what the latest opinion from somebody over there is.
Yeah, well, talk is cheap, but in this case it's expensive. And so they're jawboning as much as they can, and the crack-addicted, for lack of a better word, QE bulls are, really more interested in that than anything long-term, because we're really in a very, very short-term thinking type of environment and more dependent on, QE, whether it's in the Eurozone or in Japan or from the Fed, than anything else. And so that is what's going on. People don't want to look long-term. They just want to look at what's going on right now, and a little more liquidity through the trading desk and hedge funds and people like that are stimulative to them and will, in the short run, be very, very helpful to people's portfolios, perhaps, and perhaps not. Maybe it'll be a flop. Maybe it'll be a flop like Facebook was very hyped up, and then was a flop, and not many people thought it would be a flop, and so more QE may not work. So we'll just have to see. We got the Fed on Wednesday doing its thing, and then you've got the European Central Bank doing its thing on Thursday, and so it's going to be a very tense and volatile week, I think.
I think we also, in addition to that, don't we have July jobs numbers coming up on Friday as well?
Well, yeah. I mean, we got the Friday jobs report, Thursday jobless claims. We got all kinds of things with an economic data that came out today was sort of supportive, but then not supportive for QE, oddly. In other words, good news is not good for the QE people. So, the news is the happier they are because they're going to get their QE. So that's really the kind of bizarro world that we're in at the moment.
Yeah, it is. And that one of the things that I've commented on frequently on this show, Dave, is the fact that it's been hard for trend followers, even traders, swing traders, anybody who's even looking for some kind of shorter-term trend to catch a wave there, longer than a few hours. It's been tough to see anything longer than 3, maybe 4 days in the past few months. Yeah. And it's been the case that I think people, they see it, and it's too late.
Yeah, I think, what we're seeing is really, at least as of this moment, and have an election, obviously, in the fall coming, but we're seeing a repeat of 2010, 2011 kind of behavior. The sell in May and go away kind of stuff was pretty valid, and it was well, people have to take, as you say, a really very short-term view, or they have to back away and take a very long-term view. And if you're a technical trader, you might want to step back to weekly and even monthly charts, so you're not get caught up in all the noise and the volatility. Or if you're a fundamental person, then you really have to take a long-term view and say, are things good or getting better or not getting better? And, things aren't getting better right now, no matter where you look. So that is, that's the catch-22 for a lot of people.
Yeah, it's interesting. I was saying before you were on the show today that we're just about at that 1-year anniversary right now of that big market meltdown. Actually, the worst of the days came in early August, but it had started in the later part of July last year. So just kind of an interesting look at the charts to see, okay, is history going to repeat in some way or not?
Yeah. So it's been those two time periods were real meat grinders in terms of people making money. Just when you thought you were starting a trend in one direction, you'd go back the other way and do so, in a vicious manner. So it just created a lot of difficulty for people, ourselves included.
Mm-hmm. Well, let's just touch on one more sort of big picture issue, and then I want to move on and talk about some ETFs. But you had mentioned, of course, the issue that is just in front of everybody right now is obviously it's election season, and that the uncertainty word is in there. A lot of talk about, well, if we have a change in administration that will be perceived as more business friendly, that might help the markets. And others are saying, look, even if we have the current occupant reelected, at least that would bring a little more degree of certainty to some of this. What's your take based on what you've seen in election years?
The only certainty it's going to bring is more uncertainty, and and more gridlock. So if Romney wins, it's still going to be difficult for him to do anything, and if Obama wins, we're just going to see more of the same. So they really have to confront the fiscal cliff, and I don't know why Obama took the Simpson Bowles report that he had and threw it in the trash can, but that's what he did. And, I think he would have done a lot better had he actually done something with it, as opposed to just throwing it away and concentrating on, other things.
Yeah, maybe it wasn't what he wanted to hear.
No, the politicians are very short-term focused, and Obama's been running for re-election for the last year, and Romney's been running forever. And, and the politicians in Congress and the Senate are, afraid to touch anything. As you recall, when Paul Ryan, introduced his plan boldly, he was demagogued, and that's generally what takes place. And so people aren't willing to deal with anything seriously, right? Beyond talking points. I'm so sick of it.
Yeah, you know what? It's too depressing to think about. Let's talk about ETFs. Let's go. All right. This time, I was kind of, I look at your blog regularly. As I mentioned, I do read your tweets, and I recommend that people follow your tweets because you've got a lot of interesting stuff out there. Now, I'm noticing that you were talking about some global ETFs in the past few weeks. Tell us what you're seeing out there.
Well, fundamentally, I think Southeast Asia is a really good story. It has the region itself, and we're talking about Singapore, Thailand, Indonesia, so forth, those areas of the world, the Philippines, those areas of the world, they have wonderful demographics, loaded up with natural resources. Singapore is the financial center and also the export center, or great harbor for the region, and so with the young population, they're growing, they're buying, there's good consumer. So we tend to focus on that a little bit more, and we're a little bit more weighted in the those markets and like the markets, but at the same time, where the issue always is the fact that markets, since the global central banks have adopted this ZIRPers, or interest rate policy and quantitative easing, they have made markets correlated globally, one to another in terms of trend, with only the degree of separation apparent. So, we're still locked into a global environment. The world is flat, as according to Friedman, as he used to say. And that's very true. But I like Southeast Asia and selectively some Latin American countries. You read terrible things about Mexico, but then Mexico markets are doing reasonably well lately. And Chile is coming on, and Colombia, and so forth. So those are the areas that I think people should be most focused on, where the even South Africa, where the demographics are good, and their population is young, and they're resource rich.
And when you say demographics are good, in addition to a young population of new consumers coming up, you also mean just in terms of, do you expect incomes to be rising in these part of the world, that sort of thing? Yeah,
and spending. And, that's where, the companies like McDonald's and so forth are focusing their interest in those areas and expanding into those areas, because that's where growth is. After all, you look at Europe and Russia and the U.S., Canada, and so forth, and Japan. The demographics are very poor, and so the growth is not that good. It's particularly poor consumers, and a lot of the developed countries are very restrictive in terms of, especially the U.S., restrictive in terms of developing their own resources. So right now, you really can't develop anything in the U.S. in terms of resources. So there's a heavy foot on developers of natural resources.
Well, let's talk about some of these. I see here, I was reading your blog a couple weeks ago with a topic that's really hot right now, which is the commodity producers. Are there any ETFs from the commodity sector? We've got about a minute left, Dave. So anything in there that people can take a look at?
Fortunately for us, we got into JJG, which is the iPath grain ETF, and of course that soared with the drought, and so we're very fortunate to be involved with that. And DBA, which is the Deutsche Bank agricultural, mix of agricultural markets. But these are direct commodities as opposed to commodity stocks. And commodity stocks may not rally like today. Their costs are rising to reproduce Wheaties and so forth. But that was where the opportunity was. And, when we got in it, we didn't know it. And obviously it's up 30 or 40%. So that story is, unfolded and was, as you say, a couple of weeks ago, the place to be. And it may not be now.
Right.
Because you have to roll contracts over to forward markets, and it's the current crop that is damaged and maybe not.
Yeah, difficult. Hey, Dave, thank you so much. I always enjoy having you on the show. We're going to have to do this again sometime. Just appreciate all your insights today. Terrific conversation. All
right, Kate.
Thank you. All right, everybody, stick around. Got one more segment of today's Small Cap Roundup. Be right back.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Want to thank Dave Fry for a terrific segment there, although, you know, it really is true when you start thinking about all the political ramifications of everything and the behavior of the politicians in particular. That's just when it gets too depressing, but it is something that's affecting our world in a big way. Government run amok, politicians run amok somehow. Sometimes it seems to me like we've kind of given them way too much power, and people line up and choose teams. So it's anyway, we'll go down that path. But yeah, it's let me focus on kind of what he was talking about there at the end with regard to the commodities. And I want to put up a chart here of a company that's reporting after the bell. And this is Papa John's, PZZA, another one of these small cap consumer names that we all know a lot about. We all see John there on the commercials. He looks younger than I think he should, just because that company seems like it's been around forever and ever and ever. And if he is the original founder, then he's living well. Maybe eating all this pizza is preserving him. Who knows? But so PZZA is the ticker on this one. This is one I've tracked before. I believe I talked about it in the very first Small Cap Roundup show that I did. and you can see it there on a weekly chart. This has just had nice run up. This is one of these that consolidates, rallies to a new high, and then rallies further after the new high. As I pointed out many times, you see some stocks that kind of tend to do that in more fits and starts. They'll rally to a new high, then they'll roll over immediately. This one, not so much. It did that recently, but you see it rallied pretty quickly back, trading near new highs right now. Tight trading range recently. Reports after the bell today. And as we know, with a lot of these food producers, we do have some of the commodities costs that come into play with some of these names, as well as the consumer spending habits also factor in. You've kind of got the confluence of these. Earnings growth at this company has been in the double digits in the past 5 or so quarters. You've had revenue growth has slowed down a little bit in the past couple quarters. Be interesting to see that, but we've still got some double-digit estimates in the next couple of years. So that's what we're seeing there on Papa John's, due to report after the bell. Could be an interesting one right here. One more. Let me show you very, very quickly here. Just got about a minute or so left. This is one that had been a holding, but we got out of this stock in time prior to this big downtrend here, just kind of using some of the signals that it had fallen below one of its shorter-term moving averages. This is web.com, www. It's obviously, as the name suggests, provides some web management, publishing services to small businesses. And now, what was interesting, let me put this, it is up here on a daily chart for you. This company reports after the bell. It fell, but it was able to hold up above some of its shorter-term moving averages, holding up above its 200-day line. But nonetheless, big decline last week. Let me see. I wanted to get that. Let me get that update. There we go. It's on a daily chart for you. So you see it holding up above the 200-day. That report's after the bell. Not too excited about wanting to get back into this anytime soon, but this is a small cap that we'll see how it acts. It did fall off the active watch list, but reports later today will be interesting. Okay, I'm Kate Stalter. This is the Small Cap Roundup. And stick around and check out the Low Price Leaders newsletter, tfnn.com. Get in at that low introductory rate. All right, thanks a lot.